Hi, good morning. My name is Eric Levinson with VinaCapital. I'm here today with Phung Nguyen, portfolio manager of VAF, the Vietnam Access Fund. Now, this fund is very unique in terms of its structure. It is a Cayman feeder fund which buys our local mutual fund VSAF, and that structure allows it a really unique advantage where it bypasses the FOL restrictions, which allows fund to really buy any security without looking at premiums. And so in a sense, by buying VAF, the Cayman fund, you're actually investing like a local. And so the purpose of today's video is to spend a couple minutes with Phung to really get an update in the portfolio. We've received a lot of questions recently, which are good questions, about what's going on with the volatility, what's going on performance. I will say this in a great way. Last year, the fund was up 55%. The market was up about 37%. This year, the portfolio is down about 8.5% through the July versus the market down 21%. So you've been able to outperform in the great market. You've been able to outperform the down market. So the purpose today is to understand what's led to that outperformance, and then how are you managing the portfolio today? So let's just start there. You know, despite the bad conditions this year, how have you been able to outperform, and what decisions have you made?
So since the beginning of this year, we acknowledged that the markets was being very challenging. So first one, the trading liquidity of the market was much lower than last year due to the increasing in the interest rate. The second one, after the strong rally in 2021, the valuation of many small cap stocks became less attractive, less reasonable. So that indicated some of the market risk. The third one is the market we see much of the volatility caused by the global macroeconomics. But on the bright side, we still see Vietnam was very attractive because of the recovery. So the economic recovery was very on track, and that's allowed the corporate earnings to achieve double-digit growth of around 20% for the whole year.
So now it's interesting when we look at the portfolio. You know, one of the sectors that led the performance last year, and actually the largest sector in the market is banks. The second largest is property. You're underweight in both of those sectors. What was the kind of key data point or something that led to that decision?
Yeah, actually VAF portfolio focus more on the stocks in the FDI and export sectors since the last 2 years. So we like overweight these stocks in the sectors because of very strong earnings outlook. Last year we have around 22% exposure in these stocks, and this year we even increased the exposure of this sector because we see very challenging business environment with a lot of uncertainty. But these companies could deliver a very strong earnings growth. So that's why we made the decisions to increase the exposure in these stocks, and they were very positive contributors to the portfolio. But the stocks related to the bankings, real estate, and also brokerage appear to have much higher risk this year because of the like uncertainty related to all the macro policy and stuff. So that's why we reduced the weight in these sectors. I think the main one more factors that affect the outlooks of these sectors is the bond issuance regulations. So in Vietnam, we have a change in the regulations that might impact the liquidity of the corporate bonds, the growth outlook related to those bonds, because the banks and brokerage companies will have higher exposure to this bond.
All right, thank you. And then from a risk management perspective, is there anything you're doing differently this year that you've had to do because of the market volatility?
And actually, besides the good stock selection that we just mentioned, I think the risk management play a very critical role this year. So we actually, in our investment process, we still maintain a very selective and disciplined in stock selections. So our like screening and then selection criteria remain the same. So we just focus on the growth, the earnings consistency, like the strong business model, competitive advantage, all the stuff. But in Vietnam, you know that the most of the high risk factor especially in small mid-cap companies is the corporate governance. So we always look into these factors during the due diligence process, and we actually monitor it like a couple of years before we invested to ensure that we have to minimize the risk associated with the ability of the management to achieve the business plan. So especially this year, I think it's important to protect the downside. Yeah.
So the other thing, it's interesting, is right now the cash position is what we describe as abnormally high. And so normally, the average cash position is kind of 5% or less. What is it through the end of July? This video is the middle of August. What was it at the end of July, and actually has it come down as well?
Yes. So this year, normally we just maintain a cash level of 3 to 5% for the portfolio. But this year, because of all the risks that I mentioned, we actively reduce the equity exposure, so increase the cash level to around 20%. So our purpose is to reduce the portfolio beta during the market volatility. So with all the good risk management that I mentioned, I think our purpose is to deliver a high risk-adjusted return as we usually have. So at the end of July, the portfolio had a 3-year Sharpe ratio of 0.7 times, and it is like tripling that ratio of the VN index.
Congratulations. And so as we think about it, one of the cliches that I've heard over the period of my career is kind of, in order to beat the index, you have to be different than the index. What is your active share today, and what is it usually, and why?
Yeah, usually VAF has a very high active share, and currently it is a level of 85%. So as you know, the fund focuses more on small mid caps. So, and we apply a bottom-up like approach to select the good companies and to form a portfolio very concentrated and conviction-weighted. So focus on the strong growth potential. And actually, these small mid-cap stocks falls in the niche, has a big niche business, and they fall in the sectors that were often overlooked by the investors.
Yeah. So the other thing is, what's interesting about Vietnam, and certainly for your portfolio, is people say, are you a growth investor? Are you a value investor? Because depending upon what metric you look at, the portfolio has growth characteristics and value characteristics. What is the growth average growth rate of the companies in your fund, and then versus the index as well, just to kind of give some perspective, and then the same thing on a PE?
Yeah. So VAF growth, the aggregate earnings growth of the companies in the portfolio is at 33% for this year, while the index, like the broad market's earning growth is around 20%. And then that's why the P valuations of the portfolio is much more compelling, at just around 10 times, and the market currently forecasted at 12 times for the whole year. Yeah, so I think the portfolio with the high active share and the stock selection, and yeah, we think that is much more compelling.
Yeah, and it's interesting. So, one of the things that Vietnam offers, and we've talked about this before, is you actually get the benefits of growth, but because of stock selection, again, we're not buying the market, you actually get that growth at a cheaper valuation. So kind of last question is, we're here, and one of the things we hear is, we're a manager in Vietnam that's bullish on Vietnam. Market's obviously down. It's moved up a little bit positively in the second half. What are the kind of headwinds you see, and are there some additional tailwinds? So as we think about the last 6 months, which wasn't that great, what do you think about kind of the next 6 months?
Yeah, let's talk first about the tailwinds. So we see that after the first half, we look at the second half earnings outlook, and we see that it's still a positive earnings outlook for the listed companies. Because you know that the last year's the second half was a low base. And with the economic recovery, strong recovery of Vietnamese companies, then they can deliver a very strong earning for the second half of this year. But actually headwinds remain, because when we look at 2023, the earnings outlook is kind of uncertain. A lot of factors that we hear about is the persistent inflations that lead to the continuous rising interest rate, and that will lead to the global recession, especially in US and EU, the two biggest export market of Vietnam. And we actually focus on some of the portfolio portion focus on the export and FDI story. So that's the headwind. But with our stock selection, I think sector allocation, we focus on that theme. But when we select the stocks, it's very strict criteria. So we look at the portfolio and we think that the export and FDI companies in our portfolio are still very resilient in terms of business performance and earnings outlook. They focus more on the staples products, or the products that have advantage and they can take market share from the other global peers. One of the sectors that we think will work well in this challenging environment is the consumer staples. So in the previous year, VAF has a lower exposure to these sectors, but this year and the next year we increase the weight in the companies that of this kind, because we think that the gradual decrease of the input costs will help them to deliver good growth or stable growth, while the domestic consumption power is still very resilient.
Right. So let me ask one final question. So in the beginning of the conversation, we talked about how VAF has some unique benefits, how it bypasses the FOL, foreign ownership restrictions, by going and buying VSAF. Now, interestingly, VAF can also buy individual securities. And so currently there's two individual securities that VAF holds, BWE and AACG.
Yes.
Can you talk about why, as a portfolio manager, you bought those two securities in VAF outside of the VSAF portfolio? So not only does it feed into the fund, but it can buy other securities as well.
Yes. So normally we will invest directly into some of the stocks that we have very high convictions. So we actively want to increase the exposure in this high conviction stock. So BWE and ACG are have some common characteristic. They have very strong and capable management. They have concrete expansion plan, and they can grow at high double digit earnings in the next 2 or 3 years. So BWE benefit as a water supply company, and it's benefit from the urbanization and industrialization. So for every industrial parks that is new, they try to locate the water supply factory near that, so to benefit from the growth. ACG is another story.
So An Khung.
Yeah, An Khung. Yes, An Khung is another story. It benefits from the rising middle income class of Vietnam. It supplies the wooden furniture, but it's not only that. They supply the whole decoration solution for the people here. So you know that the real estate market in Vietnam is still in the uptrend, and the demand is very strong for this segment.
So we talk about the rise in urbanization, the emerging middle class. So 37% of the population is urban, the rest is kind of still rural. And so as that kind of urbanization trend continues, really An Khung should benefit, correct?
Yes, yes.
Okay, terrific. Well, Phung, thank you so much. And for everybody out there, if there's any follow-up questions on the VAF portfolio, please let us know. We're sitting here in the middle of the third quarter, and we do think the remainder of the year will still be volatile, but certainly better than the first half. So thank you very much.